I'm back. Meerkat here with the trade of the day. Today's lesson is on setting your stops. Hey, I just took 10 days off here while I worked my way down here to Florida. Now I'm going to be in Florida for the next month, but we'll be broadcasting from here. Hey, let's take a look at a trade we had in the Grok room this morning, and it was on UVXY. That's the leveraged ETF on the VIX itself, and the markets were going up here at opening, and so the VIX was going down. Did form this symmetrical triangle, and it broke down from that. We just missed that, but it's sitting here by the pivot line, and this closing line here is starting to form a low base here. So I set a trade, waited for the market to come to me. Let's see what happened next here. Bam! It did drop down here with increased volume, and it got me in here at $23.52. I immediately set a stop, and I'm going to use this green line here. This is my stop. I'm going to set it here at about 75, which is about a 1% stop, as we always do in the Grok trading room, 1% or less. And it's above this 200 moving average. Was acting as support over here, could now be resistance and protect me from stopping out. Let's see, look at it. Look at it. Ran up here, and that's it. Look at it. Tagged it, and I'm still in short. And if it busts that out, I want to be out. Oh, look at that. It just kept hitting it, but never closed above it. And my stop is just above that. It starts to roll down again. Back to this pivot line. That's the yellow line. And then bam, it finally broke down, went down below my actual entry here. So now I'm going to pull my stop down here, and I mean literally pull it. This is a line that I trade right off my charts, and I pull it to this 20 moving average here. I'm not quite in the money, and so we have a shield now of the 8 EMA and the pivot line and the 20 moving average. Those are protections between where the price action is and my stop. Look at that. Bam, bam, bam. Cool, cool, cool. Now let's move it on down here. Again, let's stay with this 20 moving average. Give a little bit of room to pull back and fall right back down again. And then look at that. Oh, nice, nice. And look at the volume coming in here. I'm just going to keep following this moving average in, and now I'm in the money. I mean, I'm below my entry. I now have a risk-free trade here. This is good. Keep following down this 20 moving average here. This is nice, nice, nice. Let's give it some room to pull back, but again, I'm pulling my stop down, following the 20 moving average there. And oh man, look at that. Popped up just enough to get me out at 23.42. So let's take a look at this total trade. We had a low base here. It broke down, but then it immediately reversed. But we set a reasonable stop, and then ended up turning down by hitting its head on that 200 moving average, as we call big red. And then back when I was in the money here, I just moving my stop down to where it was in the money, and I finally stopped out when it broke above that 20 moving average for a total of 0.4% in 34 minutes. Okay, not a big trade here, but just a little bit of lesson here in setting your stop so you have some kind of support or resistance between your stop and the price action to help save yourself from getting stopped out all the time. This is the Meerkat. Trade well.